Happy weekend. Today is June 17th. It is 4:48 p.m. on Friday. The weekend report today is titled "A Trappy Stock Market Within a Downtrend." And this is your report. Hi, this is Jonathan Gurney, Portfolio Manager with Gurney Financial. Friendly reminder and disclosure statement: this post is for informational use only. The views expressed are those of the author, Jonathan Gurney, that is me. This material is not intended to be relied upon as a forecast, research, or investment advice, and is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. In short, this is for clients specifically, telling them what we did this week and what it looks like game plan wise for next week. So let's hit the charts. Okay, so let's start first off with what the market did. We actually had a pretty good week this week considering how challenging it was. Okay, so first off, here was the week. Ugly, right? It's just, we are in a downtrend and each sector is taking its time and really falling apart. That's usually what happens in downtrends. This isn't being negative. This is just being a realist about where we stand. It will turn around, but at every key level above, we are resisting and failing. That's true downtrend mechanics, and I need to trade accordingly. So that worked out well this week. You can see the S&P 500 was down around 6%. The indexes in general, a lot of people think, well, there's always an opportunity somewhere, and that is generally true, but eventually during downtrends, true downtrends, they all fall apart. It doesn't matter whether it's bonds, it doesn't matter whether it's energy, it doesn't matter whether it's gold or silver. Usually the market follows its general trend and they all move together or don't. A lot of people don't understand that, but it is fact. I'm happy to show that to you. Therefore, when the market is going down, I'm not going to try to individually pick individual stocks in each specific sector. It's very difficult, and I haven't had success doing that. You can do that as a retail trader. It's very difficult to do that with the assets that I manage. That's just the reality. So here's my performance. Wednesday was the kicker. It was very, very difficult. And that was the Fed meeting that basically said 75 bips increase. When the Fed does that, that's usually not good for the market. The market rallied, tried to kill shorts, and I placed a short. I looked like an idiot that day, but it worked out very well the next day, Thursday. As you can see, the market tanked, which I kind of was thinking would happen. So I didn't look. I kept losses small, you could see on Wednesday, and pretty much timed it up pretty well, to be honest. You could see through the week where I'm having success is keeping losses small and letting winners run. So Thursday was a nice day. I took the gain. On Friday, I placed a trade at a key level at 36.74. The whole day, that was the cross point. I would not be surprised if we test that Monday. So I'm not being negative by any of this stuff. I'm just saying I am trading trend. Okay, I want to make that very clear to clients. Long term, the trend is up, no doubt about it. Short term, right now, it is ugly, and we're going to trade accordingly. So last week we beat by 4.25%. This week we beat by 7.10%. Since September 3rd, 2021, since adopting the new strategy, none of this is a brag, because the last couple of years I should have done better. Holding 30 stocks just was not working. That's why I'm just being a realist and saying this isn't a brag. I adopted a new strategy. It is helping. Am I still down? I am, but I am protecting as much as I possibly can. Has it been perfect? No. So there's the reality. At least we had a positive week when the week for the entire market was ugly. Okay, so there's the main gist that I wanted to bring to your attention there. Okay, sectors. And just so you're aware, if I show you the year to date, we're getting some fear. We're close, okay? It would not surprise me if we go down 27, 30%, but it doesn't mean it's going to go directly there. I wish it would, but the market has been trained the last few years that any dip is a buy. And so it's going to take some time to get through this. It may happen in July, but June is a challenging month. I'm going to keep trading key levels to the upside and downside. You do not have to have a bias to make money. It's not easy though, because we're getting 1% swing sometimes in 7-8 minutes. It's very difficult. Okay, so there's that. Here's sector performance intraday. It really wasn't that bad. Certain sectors got hammered. As I stated, eventually all the sectors get hit. I wanted to see materials get hit this week, and I wanted to see energy get hit. This is the day, the week. This is what I wanted to see. I wanted to see the areas that have held up get hit, and then I think we're closer. We're definitely getting there. So materials finally got hit, energy got slammed. Here's energy. Boom. That's why you have to be careful. This was in trend, no doubt about it, but eventually it gets hit. They all get hit. XLB materials, that's ugly, right? That is not pretty. So overall, we traded well this week. Another sector chart. You can see it just kind of shows new highs, new lows, and the point of all of this is basically they eventually all get hit. That's a summary. I'll keep that short and to the point. Okay, so now we're going to shift to the timer. There it is. Good. The timer is now on. Sorry, I'm doing 20 things at once. This is good. The top 10 stocks had a good day. Yields were actually lower today, which helps growth names. However, if we show the week, it was not a pretty week. So we're starting to see some rotation, which is not a bad thing and could be a good thing. The S&P 500, short term, this is the level right here. Short term, you can see this is the trend we're trying to get above. And it looks like it would not surprise me to eventually test this. Basically an up move and a downward trending market. But the key level is this. 36.74 is a key level. It's a crossing point. If we go below it, usually it'll probably go to 36.20. But it would not surprise me Monday to really be all over the place. Okay, so we're finally, again, starting to see some fear. We are above 30, but I want to see, honestly, above here. I would love to see 40, and I think that would do it. Options put call ratio as of Thursday was above 80. That's where I want it to be. So we're getting there. I'm keeping all positions very light. I am actually positioned short right at 36.74 as the cross point to say the trend is down. I have to be real about that. If we go above 37.20, right around here, I think that will do it, and it'll be close to filling this gap. And if we clear above that, I think it's going to squeeze higher. So I'm not being biased. I'm just being real. The trend is down. Trade accordingly. And that's how we've been able to outperform. Okay. Here is another chart that is important to understand. This is more of a weekly perspective. Okay. And this is the Fibonacci levels. We did not hold the 38.2. You can see we're well below that. And it's ironic that the level that I've been kind of talking about in my head for a while is right around 35.40. And it's interesting that that is very, very close to right around 3,500. So would not surprise me. Don't be surprised if we eventually get there. It does not mean you're not going to see a 5% move above up before that happens. But overall, we had a good week. We will take it. Yeah, we'll take it. And I think that's really all I need to go over. One more chart that is very interesting that we've been following. Here's the performance from a visual standpoint. We'll take that. The midterm chart, June, here is almost identical to the move on mid-month, the 15th, the Fed meeting. We had a nice pop, and here's kind of what we're doing now. Again, it doesn't mean it's going to be a straight line. We basically had this. So it might be leveling off here soon and eventually go up. But we're going to wait for price and trend to change. Right now I'm positioned 50% short. It's not being negative. It's just that's the trend, and the odds are in my favor. Doesn't mean it'll pan out if we get above 37.20, which could happen Monday. It'll squeeze. I will get out of that and position long. So you don't need to have a bias, but the trend is down. That's factual. So we're below all moving averages, and we're going to trade accordingly. As you can see, below all moving averages. So it is interesting, I'll be honest, in saying that this gap up, if we were to retest 37.20, 37.50, it would fill this gap. There are a lot of gaps above. So we could get a move higher here, but we're really struggling to hold any gains. And everything, even though we're getting big moves down, everything is so orderly. I understand you're like, a big move down of 3-4% is not fast enough for you. It's a slow burn, and people are not really panicking. You want the panic that we had in 2020 where we went 38% down in less than a month. This is going to take some time because people have been trained to buy every dip. And that's the problem. So hang in there. I appreciate your trust. It was a good week. We'll take it. Hopefully we can continue this. And I plan to continue to protect on the downside. And even if I go long to the upside, for a while, I would not be surprised to keep taking gains pretty quickly. So thanks again, guys. Have a great weekend. Get out in the sun. Thanks.